Welcome back. You're still tuned into Halftime Report. Let's get some more conversations going. Anupam Guha, Managing Director, Motilal Oswal Private Wealth, is joining us from their 22nd Annual Global Investor Conference. Anupam, good afternoon. Thank you so much for joining us. Well, a lot has been happening in markets, but it's personal finance at the end of the day, people's individual portfolios. And I was going through your newsletter as well, how you are stacking up your investors or clients' portfolio. Tell us, what is the portfolio setup looking like right now? There are many categories, but something from the mutual fund space, what do you think are some of the categories which would do well in the short term and the long term period?
Hi. So really from a client perspective, I would say that the last 2 years, given the muted, I would say, earnings and returns from the market, really a lot of discipline has come in terms of clients looking back into the portfolios and trying to correct the asset allocation, which typically is the framework for investing. So over the last few years, whatever have been the excesses, I think those corrections have been made in portfolios, I would say. And typically for a balanced investor, I would say, it's a combination of equity, debt, alternate, and commodities in some bit. So on, say, for example, the equities bit, really the allocation, at least our suggestion has been that, finally market rewards growth, market rewards earning, and which is where, there has been some bit of sector rotation that's happened for sure, which means that clients have looked at some of the sectors where earnings seem to be strong. The first quarter earnings have are coming out, and after almost 2 years, we are finally seeing earnings revival in that sense. In Nifty, it's close to 15% of earnings growth, mid cap 20%, small cap 30%, and we feel that the portfolios need to mirror some of the earnings that are coming in. Also from a sector allocation, of course, you have financial services, you have pharma, IT, etc. And in each of them, really, so say for example, in financial, it is about portfolio construction towards, I would say, more non-banks. In consumption, it is more discretionary, industrial, more new age, power generation, etc. So that's how the portfolio construct has been made. And it is through a combination in the listed space through either mutual funds, ETFs, or AIF and PMS, right? One other thing that, has really happened, courtesy, how the asset allocation frameworks have been, and the muted returns in equity, a lot of our investors in the fixed income space, have also looked at, opportunities like, say, for example, higher yield, product. Of course, depending on how nuanced you are as a client, and from a risk-reward framework perspective. So allocation like, say, a private credit or higher yield, where, one could expect slightly more, excess yield and cash flow, so those portfolios have got reject on the alternate side. Of course, gold as a hedge to the portfolio continues to be there as an allocation, and that's how, portfolio construct has been made.
Okay, absolutely. A lot of changes that have been made in the portfolio construct over the last couple of years as well with the changing market. Anupam, good afternoon. This is Vinny joining in the conversation as well. A couple of things you touched upon. One, I want to know in terms of ETFs as well, right? That is something that has overall picked up pace. So how are you seeing your clients looking at ETFs as well? Is that something more interesting? Also, you have SIFs that have come into the play with HNIs, ultra HNIs, all of that coming into play. SIFs, alternate investment opportunities, how are all of this shaping up?
So the alternate space definitely is no more, I would say, a niche segment. It has become far more strategic in a client's asset allocation model and portfolio construct. And in that context, ETFs, I would keep it slightly differently because it is, liquid, it is easy to invest into, and you could really you can play in a portfolio which is a combination of a top-down approach and a bottom-up stock picking approach. ETFs play a very key role in terms of core allocation and a top-down if you want to really play through low cost. ETFs really play a key role. But in a market like India, of course, you would also want to do bottom-up, portfolio building. And it is here that I think alternates play a key role, be it private equity or be it pipe funds, or say, for example, some of the other venture capital funds within the space, right? So the unlisted to listed, the entire spectrum.
Sure.
I think there is a lot of play, and for nuanced investors, and especially with formalization of family offices, right, where people are able to understand the risk associated with such instruments. We are seeing a lot of traction. The other thing is that, especially for business families, in their portfolio, given their own understanding of their own businesses, I think there is a fair bit of resonance in terms of some of the opportunities that we kind of showcase today to our high net worth clients.
Okay, Anupam, that point is taken. Just wanted your thoughts in terms of how you would approach the entire IT space now. It's lost around 20% this year. What is your sense in terms of what the way forward would be, and what are you recommending in terms of a portfolio allocation to your clients as well?
So from again, it will all depend on the asset allocation framework and the capital allocation. But within that, of course, in IT, our preferences have been to new age companies and moving away, I think, or allocating more towards, more mid-cap oriented stories there. But finally, as I always say that, markets are slaves to earnings. And really, it is about the earnings revival that we will have to look at. And, and especially with the entire, AI trade coming in, IT, of course, has come under pressure for sure. And we will have to see how they transform themselves, to the application-based model for, performances to come in. So it's more wait and watch, I would say, than anything else on the IT bit.
Take that point, Anupam, and a lot more questions, but we are completely out of time. But we'll have this conversation soon again. So many alternate investments, asset classes coming to the fore. So should they make part of an investor's portfolio or not is the big question. Thank you so much for joining us today.
For over 25 years, CNBC TV 18 has been the guiding force for investors, steering them through the markets.
Start your trading day with cutting-edge insights and expert analysis.
Seize every opportunity by decoding the forces that drive the market.
Equip yourself with strategies and guidance from India's biggest market mavens.
Invest with confidence as we beam live from the CNBC TV 18 Motilal Oswal studio.